as we know that accounting provides us some information, and these information are provided to the interested users. And in the story that we had discussed in the previous video, you can go through in the playlist links. So there I have discussed about how the company is started with the owner and different people are hired inside the company, and also we need money in between. Then we borrow from some of the lenders or the creditors, and then we give the taxes or something like to the government and the regulatory agencies. So all these are the interested users. So why do users want accounting information? Here are some details based on that. Owners and shareholders, why will they need the accounting information? In order to check if they are getting a satisfactory return on their investment, and to assess the financial health of their company or business. So business owners, definitely they need the satisfactory return. The amount they are paying to the company, out of that what return they are getting, it is actually satisfactory or not satisfactory. You understand that, right? It is actually to the point or not. How much they have expecting, are they getting or not? So it is satisfactory or not, that is the first point. And also they will check after the business health, whether the business is running well or it is going on a loss, whether it needs to be like further investment is a good approach, or they should stop investing or something like that. They will get to know from the accounting information. Then second is our directors or the managers that will be hired by the company. So they need these informations for making both internal and external comparisons in their attempts to evaluate their performance. Obviously they have to compare the business performance, whether let's say even if we talk about the internal evaluation of the company based on the previous year and the current year, whether they are actually in a profit or whether they need to make some changes, whether they need to develop. Obviously there is always a change, there is always means development required in a company, because our time is changing, new technologies are adopted, new performances means new ways are adopted in the company. So based on that every changes is required. So how will you know that what changes are required and why the problems are acquiring? When you will evaluate the performance, so based on that you can do internal evaluation, and also external evaluation is required. Why? When you check your company with another company, then only you can quantify why you are in a less performance level and that company is in a very good performance level. So that can also be assessed with this accounting information. So they may compare the financial analysis of their company with the industry figures in order to ascertain the company's strengths and weaknesses. And management is also concerned with ensuring that the money invested in the company or organization is actually generating something, right? In return you get something. So an adequate return is required, and the company and organization is able to pay the debts. Obviously we are borrowing, we are in debts, we have to pay debts, and we should remain solvent. Means there shouldn't be any short of money. You should be in a proper state to pay the debt that you are holding. Next interested user is creditors or the lenders. They will definitely want to know if they are likely to get paid the money they suppose they have paid 1 lakh to the company, whether they will get that back. Only not only the paid amount, but with that they also need the interest, right? And look particularly at the liquidity level. Liquidity level means whether the company is in a proper position. If further they need money, if I pay them, am I going to get benefited out of that? Whether I will get paid my money back or not, whether I am on a safe side or not, the creditors will check that. So which is the ability of the company or organization to pay its debts as they become due. Next interested user is your prospective investors. Means the investors those who are willing to invest in your company, they will definitely come to know whether your company is actually a beneficial company or not, whether I should invest the money on your company or not. So to know that, they will definitely go through the accounting information, right? And then is your government and the regulatory agencies, as we have come through with the points like IRDA, your RBI. So why they need the information for the payment of various taxes, whether the taxes you are paying, the income tax or the VAT or the customs duties, excises, etc. Whether you are paying it in the right amount or not. So that will be also audited, that will be also checked, and also it should be satisfying to the legal obligations which is imposed by the Companies Act 2013 and SEBI from time to time, because these regulations, rules and policies, they keep on changing. So accordingly they have to keep a check on your company. So these are the basic uses of your accounting information.